Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, Real Estate Radio. I'm your host, Ryan Sloper, joined by my guest, Louis Cammarosano, the general manager of HomeGain. You can check them out at HomeGain.com. I wanted to get into an interesting article that was in Inman News. It says, don't fixate on interest rates. And I think that this was actually a very well-written article, and it's extremely important because I think the psyche of a lot of buyers, if you're out there now and you have like this, it's like sticker shock. You know, when you go to buy a new car and, you know, the salesman's out there talking to you and it's like, okay, you know, shows you everything. You see that it's $20,000 and you're like, oh, that's just too much. But then the salesman comes back out there and says, you know, well, that's only $250 a month, and you have a different opinion. You know, you're kind of like, well, maybe I can afford this car now. The same thing is true with real estate. And to give you a great example, I just had a client that I took a phone call yesterday. I've been working with them for probably the last 9 to 12 months, and they've been just kind of going back and forth. They currently are in a townhome, and they want to upgrade to a single family. And I said, well, you know, you're not really going to find a better time to make that jump just based upon your actual investment, and your cost of home ownership is at an all-time low right now. If you continue to wait it out and interest rates go up, it's going to cost you more money, meaning more of a monthly mortgage payment, as well as could be more of a initial investment of a down payment. So I want to emphasize that, you know, just because you see $400,000 is this, you know, the house price or what it's for sale for, don't assume that that's just too much for you without actually finding out what the mortgage payment is and what's involved, you know, what kind of terms you can get on that loan, because ultimately you might steer yourself away from the property that you always envisioned, or the place that you could see yourself and your kids, and with the swimming pool and the you know, batting cage in the back, whatever it may be. You might have just, you know, priced yourself out because you were just looking at the sticker price versus the actual cost of home ownership. You know, Louis, you and I have talked about this quite a bit, but I think that this is a very big piece of the puzzle, especially people, first-time home buyers that are really unsure about, you know, how much they can afford and how much they should qualify for. I know, you know, you're out on the West Coast. I mean, you have a lot of high-end properties. I would say that this is a really important thing to focus on. Wouldn't you agree?
Absolutely. I mean, out here, the home prices, if you're in the city, they're very expensive. If you go out a little further, they're less expensive. But you're right. You have to focus on the total cost of ownership, which includes the price of the home and your loan.
Yeah, and I mean, it's just astounding to me because I want to say, you know, my dad constantly reminds me that in the early 80s, you know, rates were running as high as 15%, and people were still buying and selling homes. You know, yet after last year's 4% rates, where we got down in there, buyers that were being quoted 5% after that were, you know, saying, oh, that's too high. And it's, you know, you really need to just focus in on, okay, can you afford this? Is this a payment that you're comfortable with? If I choose not to buy, how much am I going to be paying in rent for a similar style home in a similar neighborhood? And I think what a lot of people are finding, especially in the D.C. metro area, is that rents are rising, and they're rising very quickly. If you've been listening to the show, over the last several months, we've talked about the rising rental prices and how it's likely to continue for the foreseeable future, just based upon a lot of the investors that are buying up properties and using them as rentals.
The amount of rental properties is declining as a percentage of the homes on the market, and inflation is going up, so the price of a rental will go up, whereas if you get a decent fixed-rate mortgage, your fixed-rate mortgage will stay the same.
Absolutely. I mean, and like I said, you know, we're talking about rates in the low 4s on 30-year fixed mortgage, depending upon your qualifications. It's just astounding to me. I honestly I've told people while I was down at the beach, you know, they were like, well, how's real estate? And I said, well, where do you live? You know, you can't really answer a question like that without knowing a specific neighborhood, subdivision, you know, zip code. And you need more information. So, you know, I went on to say, you know, but there's certain areas in where I live in the D.C. metro area that if a bank would lend me more money, I would buy up as many pieces of property as I could right now. because I know that I could pretty much, in a lot of instances, return a positive cash flow even after what I have to put down. And, with interest rates being as low as they are, I could carry that. And that's, for the people that are able to be cash buyers right now, or to be able to get investment properties and be able to, get a loan for a large portion of that, let's say 70% of it. I mean, it really is a great investment vehicle for the long term, not for you people out there that are thinking about buying it and flipping it next week. Now that can still work. That does work, actually, because there's a lot of foreclosed properties or distressed properties that you can go in and renovate and fix up and flip. But if you're just going to look to buy a home that's already been, renovated and done up, don't think you're going to turn around and sell that in a year and make a profit. It's not likely that it's going to happen. And I think that, we went through the different markets where it was back in 2003 to 2005, there was a bunch of optimism in the market where, the market was gaining momentum and everybody was so high on it. Then in 2006, 2007, it was like, euphoria where everybody was like, okay, I have to buy now. And then it crashed. 2008 to 2010, the fear basically is set back in where housing values were declining at a very rapid rate. And now we have today where, it's a borderline of a depression in a lot of areas. Wouldn't you agree, Lewis? I mean, not everywhere. DC Metro seems to, be one of the anomalies in the market, and other parts as well. But I would say that overall it is a depressed real estate market.
Nationwide, you probably could say that, and specifically some areas it's horrific. If you go to Detroit or you go to Phoenix or some parts of Florida where most of the homes are in foreclosure. Yeah, some entire areas are just boarded up.
Yeah, and looking at it from a perspective of similar to stocks, like you try not to buy a stock when it's at its highest, you try to buy it when it's at its lowest. Well, right now, to me, you may not catch home prices at their ultimate, the very lowest they're going to be, but they're pretty daggone low. And with interest rates as low as they are, it's almost a win-win situation because, right now with everybody's kind of down and out on the market, except for, the investors and the cash buyers that really have money that they can just throw at real estate right now. I mean, you have a lot of people that are still just not really up on it. And I really think that right now is a tremendous time. If you understand real estate, if you understand how it works, if you're a first-time home buyer and you're looking at renting for $1,600 and you can buy a house and have your mortgage around like $1,400 or $1,500. I mean, there's tremendous opportunities out there. The best advice I can give you is to reach out to a professional. If you don't have one, call me, 877-245-2030. That's 877-245-2030. Or you can reach out at realestateradio.dcmetro.com. I wanted to jump in a quick little couple emails that I've received over the past couple weeks from some listeners. And one was, okay, I think that I want to jump into the market now. I've been listening to your show for a while. I think that, now's the time to do it. I've been waiting for the last 2 years. Rates have seemed like they're at an all-time low. And I'm going to say yes. Once again, it's a great time. And their next question was, how do I go about selecting a great agent? And we discussed this earlier. Lewis, I would highly recommend using Lewis's service, homegain.com. Tell them where they can go. This is Mark.
Oh, Mark, you can go to homegain.com, and to the left we have a feature called Compare Real Estate Agents, Compare Realtors. And if you go there and fill out a profile on what you're interested in a real estate agent, what services you'd like to receive, and what his commission is, you fill out a profile, you send that in, and what we do is we send it out to a number of real estate agents in your area, and you'll get a customized proposal. They will not include your contact information, your name and address. We'll just have your contact information. And you can access the proposals that are sent to you by going into a password-protected control center that we set up for you. And then you can decide which real estate agent you'd like to pick or not pick. And it's a really good way to be able to interview real estate agents without them knowing who you are.
Yeah, that's great. That's great advice there. The next question came from Samantha and Derek. Where do you think mortgage rates will go? That is another loaded question. At this point, I'm going to say that they're going to stay within a range. I don't want to venture to say how low, but I mean right now you're talking about close to 4.25, whatever on the 30-year fixed. I'm going to say they're going to stay between 4.25 and 4.75 for the next couple months or so. Lewis, do you want to take a stab at that? Where do you see them going?
No, I'd agree. They're going to stay low. They may go lower, but substantially lower is out of the question. There's not much lower they can go. All that can happen is they can go substantially higher.
Exactly. So really, waiting on the sidelines, really you have a lot more downside than upside there. You know what I mean?
Absolutely.
Yeah, it's a great time. I would highly, suggest jumping in. How do I begin the short sale process and how will it affect my credit score? That was from Steve and Diane. Best advice I can give you is to reach out to somebody that knows what they're doing with short sales. Like I said, I can suggest you somebody, Metropolitan Title, that handles a lot of transactions. Reach out to me at 877-245-2030, and I can put you in touch with them. They work great. They'll explain to you the whole process. Make sure you're comfortable before even moving forward. Next question is, what does it mean to lock a rate, from Bob and Mary? Locking a rate is basically where we've actually went in and securitized that interest rate and loan amount on Wall Street, where you're locked in and good to go. If you don't receive a lock-in confirmation from the lender, then assume that your loan is not locked. So I would highly suggest you doing that. A lot of people say that your loan's locked in, but most of the time it's not. Best advice is get a lock-in confirmation. We're coming up, I want to wrap up the show here. I appreciate you coming on, Lewis. If you wouldn't mind giving our listeners your contact information and your website, just so they have that again.
Sure. You can always contact me at Lewis, L-O-U-I-S, at homegain.com, and you can reach Homegain at homegain.com.
Thank you again, Lewis, for coming on. Look forward to having you back next week.
Thanks, Ryan.
Thank you, guys, for listening in to Real Estate Radio. I'm your host, Ryan Sloper. I will be back again next Monday from 2 to 3 p.m. on 1580 The Big Talker. We're going to have some great guests lined up for you next week and more real estate news that's relevant to the D.C. metro area. I know a lot of you have a lot of pressing questions and concerns about what's going on. And the best thing that I can advise you to do is reach out to me via phone, which I give you the 800 number. It's 877-245-2030. That's 877-245-2030. Or you can reach me via the web at www.realestateradioDCmetro.com. That's www.realestateradioDCmetro.com. When you get there, just go to the Contact Me button. You can fill in your information. It'll shoot me an email, and I can get in contact with you the same day. I would love to help any of you guys out however I can. I thank you again for listening in to Real Estate Radio. We'll be here every Monday from 2 to 3 p.m. If any questions or concerns, please reach out to me. Thank you again for listening to Real Estate Radio.